Hello everyone, this video is for the private channel VasyaBTC. Today let's make the cursor black so you'll be able to see where it moves. Right now it's 9:15 in the morning. Today in Kyiv it's July 16th, Thursday, and we'll start the analysis with some brief thoughts. Look, yesterday when I was doing the analysis I mentioned that the market is definitely looking upward across all time frames, that the target zone is 65,500 plus and potentially much higher, in the range of $67,000 to $74,000. But at the same time I said that there is very strong overbought pressure on all time frames except at that moment on the hourly and weekly candles. And in the end it played out. It happened around the 65,000 mark. Here we can see that yesterday's maximum was $65,000, after which there was a pullback down. But the key point from my perspective right now is, and let's not even touch on the stock market for now, although we will talk about it too. The key point for me right now is that after this pullback we did not see well, there wasn't any sharp deep reversal downward. In other words, it went up to 65,500 and then pulled back to the starting level. Yes, so this is the starting level. If we try to draw it with a curved line, I don't want to use a straight segment, but rather make it more illustrative. But let's draw the line somewhere around here like this. Yes, look, so we had a bounce and came back here and we're still staying in this area. Yes, and now pay attention, as we move to a more detailed analysis, we can see that there is already oversold condition here. Here, on the 4-hour candles. So far there is no oversold condition. On the contrary, there is actually a hint of movement, either towards the 300 period moving average, or the blue one, or towards the 50 period moving average. And that, take a look, is $63,600. I wouldn't even rule out a move down, right here to the area of 62,900 or 850, where the 200 period orange and the 100 period red moving averages are. But the nature of the bounce we're seeing suggests that it's not very strong. For now, it looks like the market should reverse from the current levels. But there are a number of important points. Please take a close look and take note, because I'm going to remove all the unnecessary elements and technical indicators now, specifically these arrows that we have right here on the screen. Look, we can see that we already have fairly significant and moderate overbought conditions appearing on the 12-hour chart. And we also have an untraded gray zone that is very likely to be filled in the very near future, or perhaps at some specific point in the medium term as we move forward. And we have strong overbought conditions on the daily time frame, but at the same time the indicator is still pointing upward and its momentum is positive. On the downside, yes, we have a growth target in the area of, look, 67,200 and then 68,580. The negative thing I see is yesterday's daily candle. It set a new multi-day high but closed with a red body. On the positive side, first of all, we've already updated the low of yesterday's candle, which was the minimum requirement for a move downward. And secondly, as I say, it was a dumbbell candle. That is, there was a small body in the middle and on both ends relatively large wicks compared to the body on yesterday's candle. This suggests that it could have simply been a candle of a flat sideways market. But at the same time, the risks of a decline, firstly, are towards the area of the 50-day moving average, which is $64,000 as we can see, and even lower towards the area of this blue curve in order to test it even towards the starting point of this impulse, to once again revisit this same area, which is $62,400. In fact, these levels haven't gone anywhere. But if we speak purely technically, here we move it, just need to turn on the magnet tool, so that the level snaps into place. Now we move the level right here to this candle, or better yet to this one. I'll explain why. Because there was a long rally, then a reversal. A retest of the level, a deep pullback with stop losses of bias being triggered, and then a close above. Accordingly, if there's a certain level we need to test, though it's not strictly necessary, you can see here we had a false breakout and then a breakout with a strong move upward and an entry point. Right here around 64.042, they might not even give it. Nevertheless, if you don't test a certain level, then the nearest key level for a retest, after a false breakout, such a powerful move upward, possibly with another false breakout downward. Here, there was a false breakout upward right here. That is, it closed above and then went significantly lower. And now we might see a false breakout downward, below 64, with a shadow or even with the body. But overall, the situation looks like a long. For now, it still looks like a long. This overbought condition is really concerning. It's just really concerning. But the nature of the rebound downward, yes, from 60, 65, 600 from yesterday, it suggests that this is not a reversal. And now, if we look, I've already switched it here, yes? Well, let's still look locally for now. At the weekly candles, take a look. Here we have one low, a zone of lows. Here it says Alpinist on a green background. And the lows of the overbought, oversold indicator. The oversold condition was very strong. And then we move on. A strong correction, then we go to new lows, but the overbought, oversold indicator is already coming back and turning around in a zone that's not as strongly oversold. This is definitely not a divergence or convergence. Why? Because after this decline, we had a very strong, full-fledged quality growth. It turned us around exactly where it needed to, but still, the achievement of new price lows, while the indicator, in this case oversold, is showing higher lows, here we're talking about oversold, indicates that this movement, in a sense, has run out of steam, it has exhausted itself. It no longer has the adrenaline with which it was confidently and energetically moving downward during the previous decline. Take a look here, see, we went significantly lower there. Here we had some kind of attempt at a reversal, right at this spot. Let's evaluate it, by the way. Well, we grew for several weeks. Roughly from the 107,400 level, we rose to about 125 or 126, I'm not sure. So here we went up from 107 to 125. So how much is that? $8,000. Well, that's about right. That's a 6% increase compared to that price. But let's try to estimate it here. Here is our reversal point. That's a low of about $59,000. And 6% is 6,636. Roughly speaking, 4,000. That's 63. So basically, we followed the scenario that might have been outlined at this point, if you know what I mean. That here we have an intermediate upward correction, and then a deeper decline. But nevertheless, look, right now, the PP indicator, the overbought, oversold indicator, is pointing upward. Besides everything else, let's turn to this. We have a forming mathematical growth target, a strong one. This turquoise zone around 70,000, well, 70,500. I'll round it up, about $73,000, somewhere around here. We have an untested, untraded zone that starts at 67,400 and ends at 70,800. Yes, we approached it, but in fact we didn't enter it. It hasn't been worked out at all. So nominally, growth is expected somewhere in this area. Well, here, yes, around $69,000, 71, 73, somewhere around here. Third point. We had a bullish engulfing after updating the yearly low. This is a very strong reversal signal. Fourth point. After numerous attempts to break through the 200-week moving average, we ended up making a false breakout for just 1 week. As a result, we consolidated above it. And this is also a very strong signal. So, from the perspective of moving averages, our target is the area of $86,000. Or at the very least, maybe the zone of these highs, which is 82,000. But we can't talk that far ahead with you. But what we definitely can talk about is taking this level of 68,800. I don't know where it came from, probably from some other time frame, and attach it right here. So technically it suggests a move, or rather growth, to the base of this candle at 73,670. Or at the very least here at this intermediate reversal point, which is $72,800. So for each candle, yes, we have target levels when we are growing. These are the previous opening points of the falling candles or their midpoint. We moved toward the middle of this large red candle. Well, actually, we didn't quite reach it. That's 68,300. But at least we got close with the wick of this red candle approaching the midpoint of this large red one here. So now formally, yes, the opening point acts as a technical magnet. And that's roughly where things are headed. The 50-week moving average. And the PP indicator's momentum is pointing upward. So right here, it's a purely long structure. Just purely long. And it has the nearest resistance level right in this area, which, by the way, we haven't reached yet. That's $65,800. And it's quite natural that yesterday we pulled back from this from this area downward, meaning we got close to it and immediately a bunch of players saw that we were very close to the $65,800 level. Well, $65,600 is really close. So they locked in profits that they might have made by opening positions somewhere down here below the 200-week moving average. That's perfectly logical, but if we look at it, yes, that's the situation right now. From the perspective of weekly candles, this is a key point. A close above $65,800 on the weekly candles. Then we can say with a very high probability that we immediately have a number of growth targets. The first and most important one, yes, here it is. I'm circling it. God knows where it is. The reversal level is the point after which Bitcoin underwent deep corrections following strong growth. For example, it grew from around $42,000 up to about $73,000 and then corrected down to $49,000. And this reversal point is the nearest target level, $71,280. The second target zone is here, marked by the green candle, also a local reversal on the weekly candles at $72,815. And finally, the third point, so as not to clutter things with too many levels, is the $73,674 level. This is the base of the red candle from the drop on June 1st of this year. So accordingly, the target range for us in the event that the weekly candle closes above $65,800 is the zone between $71,000 to $71,280 and $73,674. I want to emphasize right now, we're not talking about the stock market at all. And one more important point, all of this does not contradict the possibility of a deeper decline. So we can consider the situation as follows. Here's how. Look, we dropped, corrected, dropped, right, like this. And now we might go somewhere up here and then continue to decline, well, somewhere there or here. Something like that, let's say. So right here, we could see a retest of the 50-week moving average. The green one, it could creep up. I don't know, maybe it might take more time. We could stay in this flat for a long while, then shoot up into this zone. The 50-week average will come somewhere here and then we'll head further down. But for now, this is growth. In its pure form, it's an uptrend. I don't see any reason to talk about a decline from the perspective of weekly candles. The first reason that would make us talk about a decline is a bearish engulfing of the green growth candle and a close below the 200-week moving average. Moreover, both of these events need to happen simultaneously, and that's highly desirable. A close below the level of $61,483, because in a certain sense right here it is the defining level. And then this area will automatically become our target zone for a decline. The lowest closing point is $54,869. For now, that's my opinion. $65,800 is the main resistance. And $71,074 to $73,600 is the target growth zone. That's how I see it at the moment. Now we're moving on. Well, just a second, let me erase all these drawings here. But damn, if I erase them, that wouldn't be right. Hold on a second, let's undo it like this instead. Okay, looks like I erased them. So now we're going back to the monthly time frame. And let's see what we have on the monthly candles. Notice that on the monthly candles, we have a very strong oversold condition. I've shown that this oversold condition does not prevent a much deeper decline. Why? Because let's open up this chart right here and now. Here, our oversold condition is right here at this point at the current level, around minus 4.07. That doesn't matter. We're looking at the dynamics relative to the values. Look, right here. In June 2022, the oversold condition was even stronger, but it moved to new values by December 2022. Let's mark a certain point right here. By the way, this is a very interesting approach to analysis. I recommend that you use it as often as possible. When you don't see the chart, when you're analyzing some derivative instruments based on the chart, make some conclusions, some assumptions. And then you compare, that is, you minimize this indicator to a small size and compare your conclusions and assumptions with what actually happened to the price over the segment in question. So we take two segments and now we'll see how the price changed between them. Because this tells us that if, for example, we now go somewhere into this area, then we might see the same kind of price movement as the one that happened here. Just like this, when the movement goes like that. Now, let's actually look at what happened between these sections. So, Look, at that time, what happened was we take this as our starting point. Previously, we used the low of the preceding candle as our starting point. But now we'll take this low as our starting point, the candle where we had the strongest oversold condition in June 2022. That is to say, the minimum after that was updated by 12%. But this is also a very important point. Now we'll look at the price change, the maximum from the minimum. Before we updated it by 12%, it actually rose by a significant 40%. So, well, if you can follow my logic and understand me, look, we are carefully considering this specific segment right here. To put it very simply for you, here is our initial starting point. From that exact spot, we went down by about 12%, so if you look at the data like this, it's clear. But the overall path included a massive 40% rise, meaning we eventually got to it like this, right? Accordingly, if we trace it back, the movement becomes quite obvious when you see the full trajectory. Let's try to imagine. And note that these 40% were the middle of the candle, the drop. Let's try to apply the same logic here. Here we have some kind of minimum point. And let's add 40% from here. 40%, that's quite a lot. But still, how much does that come to? That comes to $80,000. So formally, it's not forbidden for the price to rise to 80,000 and then go lower. Well, let's take the same numbers and go lower. Here, I'm even taking it from a higher point down by 12%. Where is 12% down for us? That's around $50,000, a psychological mark. But let's not forget that right here, on the monthly candles, there is a target zone for a decline around $41,000, $33,500. That's one line of reasoning. It's a more complicated approach, just looking at how the chart moved in the past and trying to repeat it. But I'm just showing that such strong oversold conditions don't mean we can't go lower. We can, but at the same time, the upward correction could also be significant. So, what are the target levels for a correction from the perspective of not breaking but preserving the downward structure? Well, first of all, we could come up here to the base of the green candle because look, we had a drop right here. Yes, well, not green actually, it's more accurate to say red, although in this case the close of the red and the base of the green coincide, so that's the level of $66,970. That's the first target zone, which I mentioned in the private channel as 67, and the next target is around 72 to 74,000. Why? Because there was a drop here, then a rebound, and now this level has become a key resistance, and it is located in the middle of the red candle. This is the June monthly candle, and that's why it's not forbidden. In fact, it's even encouraged to test this level. Accordingly, we could see a move like this with a decline, maybe even into this pink zone. Yes, where I have the red arrow placed. This is the first scenario, and with a fairly high probability, judging by the weekly candles, we will come into this zone. Next point. If you've watched my review up to this point and you find it somewhat organic, logical, and so on, then please listen to my absolutely sincere recommendation. This is the QuantFury platform, which I use for trading and where I do my work. Mainly, I do my analysis there. Yes, right now we're working on TradingView because my indicators are here. But just as often, I do my analysis on QuantFury, and I want to emphasize that trades are open there as well. You don't pay any commissions at all. The QR code is on your screen. Please take this recommendation seriously and join our friendly community of QuantFurians. And now, let's continue. You'll find exceptional benefits for yourself from zero commissions and spot quotes on the cryptocurrency market. Everything is completely fair and without the slightest problem. So now, the second key level, yes, on the monthly candles is right here at $73,674. Again, everything matches up perfectly with the markings on the weekly candles, where we are not falling out of the downward trend. So even if we come to the opening point of the June candle, around $73,500, that doesn't break the downward structure at all. But if this candle is engulfed, if it closes above this level, then the situation changes. In other words, considering growth toward the $80,000 area is not out of the question, but that fundamentally changes the picture. Moreover, pay attention here, we have another important level, right where the cursor is. Let's move it over here. It's really important, we've been here for many months. We've been banging against it from below. $71,280. I would even say to some extent, It's much more important, but technically we still need to engulf the June falling candle in order to talk about any kind of growth. Therefore, if we see, for example, that the June or August candle closes above this level, 71,280, but if it's below the opening point of the June candle, it still won't mean anything. It could be a trap, that is, a deception, because they'll tell you, look, we've broken through an important resistance, 71,280, but at the same time, we haven't engulfed the falling candle. This means that the sellers who sold here are still holding their opening point, their barrier, their level, and they're not letting their positions be liquidated or somehow pushed through. That's why, here and now, for the time being, due to strong oversold conditions and primarily because of the target levels, especially $67,000, and also 71,280, we have the right, pay attention, between the 58,740 level and this 71,280, we hung around for who knows how long, 1, 2, 3, 4, 5, 6, 7, 8 months. So, well, that's 3/4 of a year, right? 3/4. And so, accordingly, there's nothing stopping us from doing the same thing now. But note that a rebound also occurred from a completely logical zone. Usually, such levels are not broken through on the first try. This is the 50-month moving average. So if I now hide absolutely all the drawing tools, here you go, we broke below the 50-month moving average. Now, we might see some kind of rebound. Well, on the second attempt, we'll head toward the 100-month moving average. And here, our target zone for a decline is around $41,000. It could be lower. That's it. So, the weekly candles clearly indicate growth. The monthly candles do not contradict this, although the trend remains downward. And they allow for, and even point to, the possibility of growth to the area of 67,000 and 71,200. But the overall trend hasn't changed direction. It continues to point downward. And the threat from the stock market hasn't gone anywhere. But that will be in the next review. I'll just briefly show, without going into detail, what we have in the stock market. On the stock market, on the weekly candles using the same tools, we have this kind of group of signals. This is a very bad signal. It indicates, and again, I'll show you in the next review, that the growth relative to the upper point of this zone, that is relative to the historical maximum of the S&P 500 index, if I'm not mistaken, but we'll go over it in the next video. I already analyzed it, I just don't remember it exactly anymore. It's unlikely to exceed 5%. Unlikely. That is, the maximum for the S&P 500 was around 7,600 or 650 points. Add 5%, and that is most likely the growth limit that can be reached before a deep correction. That's what my analysis shows. But again, we'll go over it later. Here you can see a strong overheating on the weekly candles from the perspective of a group of indicators. Yes, this indicator has already cooled off, but that doesn't mean anything. The trend here is still bearish. There's strong overbought on the daily charts, moderate on the 12-hour charts, and strong on the 4-hour charts. But as I said, I won't be analyzing this chart in depth. So let's move on to Bitcoin and say the following. Yes, Bitcoin could rise to around 67. Yes, Bitcoin could rise to around $74,000, $72,000. But it's unlikely to go much higher because the US stock market is holding it back. There's a threat there that is permanently, constantly looming overhead. You know, I sometimes watch movies about climbing 8,000ers, and there's this concept of cornices when there's a buildup of snow. It hangs over the slope of the mountain from above. You look at it and everything seems fine. A person can even walk on it because compared to the dozens of tons of snow it's made of, it looks like a flat surface. But at some point, this cornice hanging over the cliff breaks off and takes everyone who was walking on it deep down, and those people die. There are plenty of such cases and examples. If you're interested in this topic, you know what I'm talking about. So right now, the US stock market is walking along just such a snow cornice at an altitude of about 8,000 meters. By the way, just symbolically, notice that 8,000 meters now roughly coincides with the value of 7,616 meters. If we're talking about futures and mini contracts, I decided to make this review public. I will post it on all my channels, not just the private one. But again, if you find this analysis and these reflections honest and logical and all that, then please take my second recommendation into account. Once again, I want to say that Quant Fury is a platform I sincerely recommend. It's the best place for trading. Zero commissions, thousands of financial instruments, not just cryptocurrency, not just stocks, not just stock market indices, not just gold, oil, gas, copper, silver, and various others, but also a ton of other financial instruments from all over the world, in particular the Forex market. So install the app or trade directly from the website aquanfury.com and you'll be happy you did. You'll thank me later for these recommendations when you realize the real advantage you've gained in trading. It won't. This site or platform won't do the analysis for you or make trading decisions for you, but you'll realize just how awesome it is. Hugs and kisses to everyone. Subscribe to the channel. All the best to you. Goodbye.